Wonderful good day, ladies and gentlemen. We are here still in Zurich at the Dolder Grand Hotel at the Zuri Invest event. And with me here is now Condor and Mark Child, the CEO. And we would like to talk a little bit about an update, what happened in the last 4 or 5 months, as we spoke already at Minds and Money.
Yes, we did.
Mike, great to have you here. We spoke at Minds and Money already. I think you brought out your reserve statement and also you had a PFS. Maybe you want to elaborate shortly on that?
Yes, just to recap, in December we produced a pre-feasibility study and also 2 preliminary economic assessments. So the PFS gave us our first reserve. So we have 675,000 ounces of open pit reserve at 3 grams, really high grade. And that'll produce 80,000 ounces a year for 7 years. We then showed another scenario to bring in 2 feeder pits, which would give us 100,000 ounce production for 8 years. And then we showed a third scenario, which brought in some underground, which gives us 140,000 ounces for an 8-year period. In each of those cases, the key thing is that we've got high grade, and as a result, the all-in sustaining cash costs are $700 an ounce, or just under.
Wow.
Which is lower quartile. And the upfront capital costs for the reserve case is $110 million, and for the reserve plus the feeder pits is $127 million. So not too big a capex for this market.
It's manageable, I would say.
It's manageable, that's correct.
You've already approached, let's say, banks, or you have been approached for that?
No, we're a step behind that. We haven't done a full definitive feasibility study. We've just got the pre-feasibility, and that was on our website on the 21st of December after we met at Minds and Money. So we're now at the stage where we raised $10.5 million last October. We have $7 million in the bank at the beginning of the year.
Very good.
And we sat down and said, well, how best do we utilize that over the course of 2015?
Yeah, that's right. And also, I think in this environment, to preserve cash is key, isn't it?
I think so too. If we just spent our cash doing infill drilling and doing definitive studies, we would burn through the cash quite quickly. So what the board's decided to do is to try and have a year-end cash balance of $2 million, and not to run out of cash this year or come back to the market this year. So that's the challenge I've been set as CEO, to come up with a plan for that. So what we've decided to do is to have a twin strategy of de-risking the project on the social side and on the permitting side. So with that in mind, we've applied for the main permit 2 weeks ago, the EIA, the environmental permit in Nicaragua. We're confident of getting that this year. And we've said to the government we want to try and get as many permits as possible in 2015. So we have a team working on that. And we've signed a deal with the government to help us get those permits with the Inward Investment Agency. So they're hiring a couple of lawyers to work full-time for us to help get those permits. And the second de-risking bit, apart from permits in this part of the world, is buying the land. And so we're working with the government to clean up land title and to acquire and secure the land that we need over the surface area of the mine this year as well. So those are two main objectives. So after a pre-feas, we know there's no problem with the geology or the metallurgy or the hydrology or the geochemistry or the mine plan. So it's those we're advancing on the permitting and land side. And the second part for us is to show the upside of the project, because we think we've got a very big gold district. This is a district play. We could potentially double the ounces to 5 million, but we need the money for that. And the way we're trying to demonstrate that is we've initiated a 4,000 meter drill program, where we've just completed 1,000 meters of that. And it's not infill drilling, it's testing new targets.
You saw the core already?
Attractive. I've seen one.
You're satisfied?
That's a good question. The geologists like what we're doing.
Okay, good.
They're pleased. And we've also doing 4 areas of roughly 10 square kilometers each of soil sampling or geochemistry to show the upside potential of the project. So those are that's our twin strategy for 2015.
Yeah, that makes really sense. Perfect. Anything else you want to add?
Not particularly. It's a question of preserving capital. It's a difficult market. We think that the market will appreciate getting permits and acquiring land, After that, towards the end of the year, we'll have to get further towards a decision of, do we take this to production ourselves, or do we actually sell the project or joint venture the project? I think that as a sole asset, to raise $130 million, as we currently have a $42 million market capitalization, is a big ask.
Yeah.
So I would expect us to probably enter some sort of form of corporate activity if we go into the construction phase, either by selling the company or the asset or by merging with another company, but not remaining listed as a sole asset, raising $130 million to build this.
Okay, fantastic. Well, Mark, thank you very much, and all the best for that.
Thank you.
And I'm pretty sure you deliver what you have said and get the permits and get the land and get the thing cleaned up so far. And we look forward on some drill results.
Okay, look forward to meeting you again. Thanks
Thank
very
you,
much.
Mike. Thank you. Yeah, that was Mark Child, the CEO of Condor Gold, and you heard it. It's a twin strategy for this year. First of all, preserving cash. That's important in the exploration sector. That's one thing. But on the other hand, they are de-risking the land, not the land, the project, of course, by acquiring some more land, cleaning up some land titles, and of course, making sure that the permitting is in a good standing, good progress, and drilling 4,000 meters. They did already 1,000, so we look forward to some results. Check it out. Thanks and bye-bye.